very quickly session, a short session. I'll put up the recording. The session is risk and reward and volume. That's I want to discuss, and that I will be discussing for a decent amount of time before we, and also executions into next week. Again, your reward, what is your reward when you're trading? Is H4 condensed trading plan? That's your reward. That's pretty much it. Your condensed trading plan is your reward. So here, let's consider this example first. So we're discussing risk and reward here. Please understand this is important concept. This is where I am. This is my condensed version. This is a condensed version. Understand? Make sense?
Yeah, makes sense.
This is a condensed version. Please understand, in your condensed version, which is after the trading plan that you make, it's pretty simple. It has to be a significant areas of interest. You can't select the minor ones. Please understand this. If this was your condensed version, this is your ultimate target trading plan. So my trading plan is pretty much this. I'm telling you a condensed trading plan version. This is my condensed trading plan, which is H4. Now, we don't trade this trading plan because you can't trade this trading plan because it's too big in a sense. If you're a swing trader, I will say you can do this. A setup trader can't trade this. In this even trading plan, your stop losses will be pretty huge. Okay, this is your ultimate setup trading plan, but you can't trade this trading plan with this risk and reward. Your stop losses are pretty high. You have to reduce your volume. In my trading, your risk is smaller. The reward is decent. So let's focus on this. This is your condensed version. You made a condensed trading plan. Then what? Guys, you have to make an intraday trading plan, which is your everyday trading plan that you're trading after you condense. Your condensed trading version, while stay for a week, 2 weeks, it normally stays for a week for me. That's it. After a week, I clean the charts, make it again. So let's say this is my trading plan. It will be accomplished as long as price comes here in this area. It will be. I have to take it off. Oh, price breaks this, I have to take it off. Please understand, it's not going anywhere until the price either achieves the target or invalidates this. That is very simple. Everybody understands? Please confirm. So you made a trading plan, price went halfway, come back. Trading plan not going to change. It changes when the price arrives 80% close to your journey, close to the area of your target levels. So everybody understands? Please confirm so far. Yes? Kevin?
Yes.
You understand, Matt? Good. Now, this is setup trading plan, condensed version of trading plan. Okay, you can't trade this. The problem with this is your risk and reward risk is still decent than reward, but what happened is price don't trade like this. If you're trading this, it's like swing trading. I tell you what, it's into 2 weeks, 3 weeks of kind of trading. Not 1 week of trading, because price don't go into condensed trading plans straight away. Price might be moving like this throughout the week. Next week it does like this. So then what is your intraday trading plan? How would you devise a trading plan? Risk and reward. That's what the topic is today. And again, volume we're focusing on again. I'll touch base on volume. So guys, I am trading this today. So let's say I was trading this yesterday night. This was my risk and that was my reward. How would you make it? You go on H1. You will establish your H1 level. Everybody understands? Please confirm, guys. You establish these levels before the day begins. Please understand. Everybody understands, right? So guys, you will have this well in advance. So I had this. Everybody understands? Please confirm. Yes? Simple.
Yeah, I understand.
Now I've done this. And also I can see there's the next level there. I want to see if this invalidates where the next level is, because my trading plan is not going to change. So look, we're not using this whole trading plan because this is our H4 trading plan. So there are numerous levels in between. So I will mark those 2 important levels. That's it. Please understand, I'm marking them for the purposes of area for execution, where you'll be executing H1, support and resistance. I say this, use H1 specifically for this purpose. Again, for entry and risk. So my trading plan will be what? Let me show you the trading plan. Guys, first thing is first, go back to H4, mark where the variation is, where you see that variation. Guys, where I see the variation is this. Can you see it? Everybody see it, right? Please confirm. Yes. Variation
Yeah.
is always your first target. My apologies, but if the variation is against you, your condensed trading plan is not a target. The target is your variation. Remember this. You will see the reason price bounces from it often. So this is our first target. So this is the first target break of this. If the variation was bearish, my target would have been the condensed trading plan version. So now my trading plan is this. Again, this was the trading plan. This was it. Now you condense it. Everybody understands, right? Simple. Now this is a condensed version of a trading plan. Of course, break of this would eventually open doors for this. This is my ultimate trading plan. I'm giving you a very systematic approach. I will show you approach. Everything will be on the chart and you are just waiting for it. You'll see this. Your risk and reward tool will be on the chart. Your direction is already determined, of course, by the condensed trading plan. Your entry level will be on the chart where you're interested. Then you will be waiting for what? Volume before you execute. Again, this is default trading. I will also show you no volume, how to execute my aggressive form. I always try that. But please, it only person who can do aggressive is a person who can say that he has capitalized on every opportunity of the volume. He doesn't miss any. So now this is condensed trading plan. How to make intraday. Please, guys, this is what I've done before my day begins. Please, before my day begins, price is there. Done. Now I'm going to make a trading plan that I am trading, which is the active trading plan. Look at this. Condensed to intraday. Intraday means a trading plan on that day. So guys, this is first trading plan. Please come. Target TP level never changes. Your risk will changes. So your risk is your H1. Your reward will always be, presumed reward will always be your H4. If you guys understand, please confirm. Then it all comes to management. Management is depends how the price would take you up and down, here and there, totally up to the price. That everything is after is management. But this is a trading plan. This is always going to be your trading plans like this. Your target will be H4. Remember, condense your H4 areas of interest. Before the H4 area of interest, you need to select where the variation lies. You have to select the variation first. Variation is your first target. Remember, price doesn't break the variation. So now I think this is pretty much the bloody variation. So your target would have been this. If it makes any sense, please confirm. Yes, you can use this, but you will see when the variation forms, it's a variation will price bounce from there repeatedly. That is always going to be my first target. Again, I like this, I'll keep it to this. So it depends. What is your trading plan? So if your trading plan was there, you would have been out of the trade. If your trading plan was there, you would not be out of the trade. Totally depend on you. Normally keep it to your variation first. Yes, my apologies, guys. This is the variation. Everybody understands? Please confirm. Yes? So guys, how much
Yeah.
risk against reward? Anyone? Guys, this is exactly your trading every day. Now you can't come back to me and say to me, my risk was smaller than my reward. It's impossible for somebody to say me, because you will see your risk will be 1 and your reward will be 3, 4, 3, 4, not 2. It's impossible, because that is exactly how I have traded recently. Anyone, everybody tell me exactly you understand. Your risk is intraday, H1M30. Your reward is H4 actually. Ideally, you can have this as well, which is perfectly fine. Totally up to you. I recently see by repeatedly trading that if the variation is not breached, forget you're gonna get into the next zone. So variation has to break. Variation is bullish right now. You can build a case. This is a variation, but I'd say this is a decent level. Clearly, price breaks this box. It's the range is gone. Then you're all bearish. If it makes any sense, please confirm. If that makes sense, yes. Damien, Matt, you understand, brother? Yes. Kevin, do you understand?
Yeah, makes sense.
So, what is my risk against reward? Anyone? Guys, your reward risk. If this fails, let's say I took a loss. Let me give you an example. Price come back, you would know exactly where to enter. This is my next trade. Again, my risk against reward is how much? So please understand, guys, if I lose 3-4 times and I win one, trust me, I will still be in profit. I have tested this. That's why I'm telling you this week with few students. Anyone has any questions so far? Any
No
question?
question.
Simple, right? We'll come to this, how to take an entry later. But now I'm sitting with this. Everything is done. Life is good. Look, everything is done, right? Life is good. Trading plan, risk and reward tool for intraday trading. Know exactly area I'm interested in and execution. Now, before you commence the process, please, volume cannot be against you. You can't have volume against you. You can go for the price exhausting, fine, or volume is not against you. You can't go with the volume. So guys, see this. This is, I'm going to highlight that, I'm going to mention the candle where the volume is. If the volume is, I at least give another 4 hours. This is default trading, guys. Please see this. This is the candle. I will give another 4 hours. This is the candle. It's not a volume candle. I tell you why I don't classify these as volumes, because I can see the rejections. It's a class B for me. Volume, Pacific volume candle is this. Again, it is a volume candle. Nobody's saying it's not a volume candle. It's class B. You will see in your trading, you will end up getting into these trades, which is fine if it happens. There's nothing wrong with it. Okay, if this is the kind of candlestick I have, I will stick to my aggressive rule of execution because I'm not satisfied. But yes, there was a clear, again, we'll say this is a volume candle. There was a body again, prior to the body. Wick is there, but still volume. But I am ready watching it because I can see it's losing its steam. Again, it hasn't, it's almost there or close by. You are interested in the trade. But guys, you should not be missing these candles. If you start focusing on what I am saying, when you see your bread and butters, there is no bloody excuse you didn't go for a trade. So this is, now let me tell you the thumb rule. 80% price will move like this. You're seeing these movements. I'm showing you. I'll show you the movements. These are the moves taking place. Even this is the move. So you're literally following H4 variation, and that's what you're up to actually. It is an internal wave which I'm following actually within direction of my trading. Guys, you will see 80% price exhausting, not momentum. I said exhausting before it takes the move. Momentum is one thing, exhausting is another. Guys, can you see? Please confirm, guys. We are talking about bullish and bearish both. Forget the market structure, where direction you're trading. 80%, sometimes yes, you won't. Sometimes you can't see it. So this was volume. There wasn't price exhausting there. You're not meant to catch everyone, but 80% of the time, I say 70%, let's say 70%, being conservative. Guys, you will see 70% it happens. So use this 70% is your trading. If 65, let's be more humble, that 65% is your trading. Please, guys, that is what you want to trade. You don't want to trade that remaining 25%. I do trade remaining 25%, by the way. For example, is this. This is where I go aggressive. I will show you exactly the rule by which you are looking for your default, and you can yet go for an aggressive mode so that it won't affect your default mindset. And yes, you've got a decent if it works for you. So we'll discuss. This is what I want you to practice and achieve. Guys, if I'm teaching someone, I won't tell that person to take a sell trade. They'll say you missed the sell trade. It's very embarrassing for me to tell somebody to take a trade after this candlestick. Imagine, it's not the win that you're after, not at your level. The satisfaction that you will have. Guys, if you lose after price exhaustion, guys, you will see that you will not ever feel worse. You will know exactly, okay, price is good. But if you feel with you was taking a trade where the momentum was against you and you was trying to sell, trust me, you will that day feel that you don't know how to trade. You see that, you have that feeling. I can promise you that. So please confirm everyone understands, guys. So until next week, I'm very interested in this selling shit, and my trading plan is this. Are we clear, guys? So guys, I wasn't interested selling there. Wasn't interested selling there. Okay, yes, I was interested selling there. To be honest, yes, I was. I thought shit is going down. I took a small loss there, but try to understand why did I took a loss. Please understand why did I took a loss there. I saw the volume. I built the case on it. Low volume. It failed fine. After this, guys, I had no issue reading any candlestick. I was just watching it. After this candle forms, I was like, okay, let's have a look. So after this candle forms, I was watching it. This after this candlestick, I've been selling it. So for after this candlestick, I have no problem with I have no problem. But specifically, if I open my day and I see this, I see the exhaustion has started. But yes, open my day, I saw this candlestick. Trust me, it doesn't really bothers me too much. I can still focus on my execution. But yes, you want to wait for the next candle. It is this is because I tell you why I respect this candle. It's a full bullish body candlestick. Yes, respect it. Normally, what happened with this candle, I'm expecting another push higher before I see okay. So I know exactly where this candle will lead it before I might see exhaustion before it goes. So I'm totally in control of the journey, even not just watching what I need. I can see the development of it forming. This is the candle. You would not go for a trade after this candle. So I'm only highlighting the candles now. I'm highlighting the candlesticks, which is exhaustion. I'm going to highlight the candlesticks and mention which candlesticks after I will not execute the process. I wait for it. Not rest of the candles, I don't really care. This is not a candle I will be concerned. This is not. Please confirm everybody understands. Yes?
Yes.
After this candlestick burned me many times. Please understand. After this, yes, I'm interested in the process. You don't want to apply the process when you went later on H4 and you say, fuck, there was volume against me. Losing is always part of your life. But to lose in that way is devastating, takes away your full confidence. Please confirm everybody understands 100%. Kevin, you understand, brother? So, guys, we discuss reward against risk. Look at my reward against risk. We'll come to management later. We'll discuss this. First of all, you're not focusing. I'm going to show you a basic way of managing the trade. What your objective is, this is what you have to achieve. Securing your position is the first beginning point of the management. You should all be able to secure your positions after execution. Matt, you should be able to secure your position. Management, you will develop in time. You will see this. Again, I'll be giving you a very precise way of going about, but discuss the management topic, securing your position is your objective number one, brother. Start doing this and carry on trading live, along with, of course, will makes any sense. Securing your position is the number one topic in the management. Securing your position. Again, what is my risk against reward? Everybody see it, right? Everybody understands. Any questions? Guys, your risk against reward intraday will always, your condensed trading plan will always change into an intraday trading plan because you're trading every day. You might be still in the same trade, but you will still have the tool actually, because next day what happened is this. Please understand. Everybody understands, right? Please confirm. Yes, there is a price next day.
Yes.
So next day, if I take this, you will see this. I will have like this. That day, my condensed trading plan will be this. The difference will be I will lock that position above this, and I might open a second order. You will see how to. So your intraday, you will always have intraday trading plans. Condensed trading, either you are being in the trade, so you're securing it. So I don't care about my previous trade anymore, which I will of course show you in scale in and scale out. I don't now care. I only focus on this now and my new entry, new order. That's all it matters to me. When that order invalidates, everything clears up. So normally what happens is if you see price carries on like this in a trend, and that is Monday, Tuesday, Wednesday, Thursday, Friday. So what happens is you will have an entry on Monday, carries on into Friday. That is possible one will focus on. But right now, I just wanted to focus on. So anyone has any question about, no, I don't want anyone to come back to me and say my risk was shit against the war. That is just not possible, actually. I mean, it's very difficult for anyone to prove me that. If it makes any sense, please confirm. It's not 1, 2, it's 1, 3, 4 actually. This is not the ideal one actually. You're normally going to have the bigger, better ones than these. So please confirm. So this was a trade, easy trade today. I mentioned about this yesterday, a clear trading opportunity. We would have gone for a trade. This is 76. Any questions? Anyone has any questions? Any questions? Matt and Kevin, both clear? Yes, 100%? Guys, can you hear me?
Yes, Paula, 100%. Sorry, I was on mute.
Guys, female trader. This is one of my female traders. She is 10 times dumb and slow. I say to her on her face, and I told her that I will be telling other students too. She is dumb, she is lazy, she understands things very slow, she takes ages, she is reckless. One thing she is not, she has a very strong brain. She doesn't have too much money either. One thing is not in her trading. She has an extremely strong brain and belief in what she do. Guys, this is this week trading, which was pretty reckless trading. Look at the results. 230 pips she's made. Look at this result. I tell you her mental strength. I tell you where I can see the mental strength. I can clearly see the mental strength. I tell you how do I see the mental strength? Anybody would tell me. How can I see the statement showing the mental strength? Not her profits are not mental strength, neither the losses. What is her mental strength? Anybody would mention to me. Her ability to carry on doing them. Can you see the application is not non-stop?
Yeah, the number of trades.
Yeah, non-stop focus. Fuck the losses. And she's reckless in a sense. She should be closing the trade. She closed the trade late. She says to me, that's one of her problems. She's getting better at it. But because even with that deficiency, imagine the day she controls herself on that. What will happen to her trading? Now, she is a better trader than me. Please understand, guys, she's a better trader than me. I have no problem in suggesting a student is better. Now, I met specifically, I'm referring to you here. I'm not saying that she's a better trader because of her profits. Have you noticed this? But why I say this, I can see repeatedly in her trading that she have patches, losses sometimes. But you can see the statement talks. She focuses on the I've never you can clearly see when she takes loss how she goes about it. A statement speaking of itself. It's impossible for a person who is not mentally ready to carry on trading like this. Guys, this is called a mentally ready trader. It's not defined by your profits. It's defined how you handle your losses. That's what makes you. It tells a story here. Guys, the day she increased her volume, she doesn't have too much money. She's not sound family. I mean, not sound financially, but the day she fixed herself, she will be a very good trader. I mean, once she have the money, I'm sure she will really. These kind of people who are the people who really put £1,000 in the account. You meet them after a few months, and they are sitting on 100 grand and trading like it was nothing for them. Was slow in learning, understanding slow. If she does analysis, you'll be shocked to see her analysis that she's struggling to do analysis. She's really confused. You'll find her. This is where I end up yelling at her a lot. Imagine. But once she done the analysis and she gone to apply the process, guys, the self-belief is, and I say this to you guys, 90 times more than most of you. Both of you, I'd say this. It's not the profits. It reflects in her execution. That is what I want you to achieve. Please, beautiful trading opportunity on this gold, Matt. Beautiful trading opportunity. So let's talk about risk and reward on this. Okay, guys, let's talk about. Again, my focus is risk and reward and volume. That's what I want to focus on. This is where you are. This is where your H4 level is, right? Everybody understands this clearly? Make sense? So your trading plan is what? Presume trading plan will always be the next level. You're not going to trade this, of course. Now let's make an intraday trading plan. Guys, I don't be concerned that you will end up catching the pips, by the way. Now my objective is, you can't become good at management overnight. It's a gradual process. One thing you can do is, you should start. It runs with your emotions, actually. Let me say this to you. Securing position is something. So these are the two areas I'm interested. Make sense, guys? Please confirm. Guys, I'm not identifying the areas where I'm interested taking a profits. Everybody understands, right? And now I'm going to identify the area where I'm taking the profits. This is an area where the variation lies. So everybody understands, please confirm, guys. Yes?
Yeah.
There will come a stage in your trading, not far, very soon. Matt, you should be getting at this. That you will be just making a plan and you be like, okay, let me execute it. Guys, so this is your trading plan. Had this failed, this is your trading plan. But remember something, between now your trading plan and execution is 5%. Management will be everything after this. Between you and your execution lies the volume. Please understand, guys. Guys, volume is against you. You can't take a trade on this. A can't start process. This is the first candle dips on the area of interest with the wick underneath a class B. Yes, you can. Look, if it's 100% against me, I will. Yes, it's against me still. This journey, I can see it. Against me, not interested. Yes, this candlestick equal wick, start focusing on it. Bearish body, yes, class B candlestick. Yes, I am looking for execution. That's it. I get an execution within next 4 hours, that's good. Not next 4 hours candle closes, even better. So guys, these are the two candlesticks which clearly shows exhaustion. They are not showing momentum. This candle is showing exhaustion and this channel is showing slightly bullish momentum entering, but exhaustion as well, which is nice. So it starts from exhaustion, leads into momentum. So guys, you are interested there. This was the trade. This trade is, how many pips is this trade? Let's talk about this. This is a trade.
I didn't catch it from the bottom because I only come to the charts at New York Open.
Yeah, but I'll discuss the execution.
15-minute pullback.
Yeah, I'll discuss an execution also where you really be able to catch. But again, let's say you catch from there. What is your risk?
Yeah, I mean, I could have caught it, but I just don't bother looking to it.
Yeah, so on average, you will have 30 pips stop loss, 25, 26 pips stop loss. And this is a trade for how many pips? 100 pips. Now, guys, my question, yeah, 200 pips. My question is, what is the percentage of risk against reward on this? Anyone?
A lot.
Yeah, guys, please understand, there is no volume. Fuck the trade. Look, leave it. Don't push yourself. Leave it. If it goes higher, let it go higher. It's not comfortable trading. Okay, after this candlestick, you could have catch this. Okay, fine. There's a big exhaustion. I would have tried. But after this candlestick, my trading plan will only be a buy trading plan, which was a buy trading plan as well yesterday. But again, I don't like the volume. Guys, you don't like the volume, leave it. That's not what you wanted. You wanted this. Please understand, you want to, even if what will happen, market will say, go for a trade. You're going to miss it. Yes, you will miss it. Of course you will miss it. Part of trading. But guys, this is what you're after. This is where you're conducting mistakes. Students are doing mistakes. This, and yes, the real battle is later management. Management, you get used to it. It runs with your emotions. I'd say this. Your key is to secure the positions. I will show you a very easy method of taking trades, guys, so that your focus is only on management. But there are numerous trading opportunities present. Okay,
Yeah,
the most. Let me talk about the most easiest one. This, which is one I give my students on Skype to practice this weekend, and I was practicing last week as well. And there was a new group of students. Guys, reload candlesticks M15 OH1. This is based off candlestick pattern. So your trade, your candlestick pattern, you're looking for exhaustion candlesticks leading into a momentum candlestick, either of them. So you see a cluster of exhaustion, you're interested, or it forms a momentum, meaning of engulfing candlestick, you're also interested. It has to be a reload candlestick. That is the key word here. This is a strategy, a simple strategy based off candlestick patterns. No variation is involved in this. Now, when I say reload candlestick, I will give you an exercise to practice later, but I'm just giving you, reload is this. So your reload candlesticks would have been there. This is a strategy based off candlestick. every student in my Skype group, I've given them the reload candlesticks. So every student of mine is doing practice basic reload, because a person who can't do with reload can't go at the next level of execution. That's another level of execution. And that level of execution, if you have to think, concerned about your trading plans, you're concerned about your risk and reward, concerned about thinking I might or might can't, forget you can ever trade successfully. So the most easiest is, again, we will be covering it. Again, I don't want to go into this, but yes, beautiful trading opportunity. Again, can you say me your risk was more than your reward? Anyone? Can you guys claim that? Go on. You can't, right?
No.
No.
Okay. So the topic debate, which is my risk is more than my reward, is gone. It's not more.
No, that's because people are taking them at bad levels.
Say it again.
You only get a bad risk reward if you take it at not good levels.
No, your trade has to be from this daily level. I will talk about this, Matt. How can you take?
Yeah, I mean, if someone's trying to take it in the middle there.
No, I tell you
then
how
they're
you can take a trade in the middle. Let's talk about how you can take a trade in the middle. Let's say your trading plan is this. Yes, for instance, get it?
Yeah, I know how you make these halfway.
So please focus with me. Focus with me, guys. This is your second level. Yes. Again, you can. Nobody's saying you can't. You can, of course. It depends your trading plan. So if you're taking a trade this time, your risk and reward will always be, this is your risk and reward. If it fails, you get the next entry at the next level. Simple. So it's always going to be more than. Yes, always be more than, but depends where you are. Of course, you can take a trade there. I will give you specific rules to enter here and enter on a pullback. So pullback is this. Please understand. This is called pullback. This is the trade you have taken here. This will be a pullback. Please understand. So I will tell you specific rules for this, because this is totally different how you approach than this trade, again, so that you minimize your risk. But yes, trading plan again is this. Of course, if you arrived here, then your trading plan was this. It's not worth the money, so you won't go for a trade. This is only a trade that you take at 50% of it. Yes, you can. So if the journey is 50%, let's say, yes, you can try another trade. For you to take the trade, let me say this, there has to be a support and resistance level. Again, I will be giving you, Matt, you first, of course, a specific approach. You know the approach already. I just tell you that is only you can use.
I got it.
I don't want to mention here because, Kevin, I don't want you to think of anything apart from focusing on this. So again, risk and reward, guys. Let's say my trading plan was this. Let's say this was my trading plan. I was trading it. I took a trade. First day is done. Next day I'm trading. Price is there. I want to re-enter. I didn't re-enter. It's still a decent risk against. How much is risk against reward? Anyone would tell me. What is the percentage? 1-3 or 4? 1-4. Guys, so it means if I lose 4 trades, you lose 3-4 trades, 3-4, and you win 1, you always will be. So the discussion of risk and reward is gone. Again, guys, this is a standard risk and reward. Again, what happened at the end depends on 2 factors: what price did and how you managed it. It's not in your control, apart from management. That's it. But please, I want this risk and reward clarity to kick in. Your risk is this, your reward is this. To take a trade, use H1. You don't use less than H1. The reason is it's very choppy in nature. You can't use less than H1. So yes, this could be a possible next plan for tomorrow for someone. Even right now, somebody can take it subject to his rules as met. So this could be a next opportunity, but of course. Anyone has any questions on risk and reward? And again, the key point is volume. So yes, volume is decent. My execution is on. My process is on. I don't have to think of too much about here that I need a candlestick. I don't need a candlestick to execute. My process is on, guys. It's a volume in my direction. That's all I need. It is when it's against me, then where you say, let's stop it straight away. A beautiful trade taken. Well done. Anyone has any questions?
Yeah, well, Waqar, I have a question real quick. Can you please go on H1 for a quick second? Just have a quick question for H1.
Yes.
So you see that breakout candle, right, from the past resistance? If price breaks that and from the middle level,
Where is that?
no, remember the middle level you marked? The lower high where price is breaking out of right now? The no,
The
no, no.
car array on the lower high
Yeah, the lower high.
Yeah.
No, to the left.
up where you got the bullish
Up. Yeah, yeah,
engulfing and then the
yeah,
bearish.
right there.
The
Oh,
rung.
this.
Yeah, so you see how price is breaking out of there? So if the price would retrace and go underneath that level, would you take the trade within the middle of those two? So if price,
No, no, you don't. You don't. Show some respect. You don't. You don't. It depends what strategy you're using. Of course, I can if I have to, but you should not. This is the whole point. I'm telling you a very easy way of trading. Just focus on the levels. Don't take a trade unless you. Okay, yes, you can. What did I say to you the other day? When you can.
on the level.
When you can take a trade, guys. Okay, I won't want to restrict you guys. Let's talk about this. You want to pick a trade from the here. What is the way? What you have to establish before you take a trade?
I actually took the trade under it, but I had a direction and I had a high low. So
Yeah,
that's my
I
rules.
know.
That's enough.
Yeah, but Matt, I'll tell you very logical way. I don't want you student to see the. If I go on M5, I might have so many trades. I don't want them to go M5, M15. I want them to see it from H1. If you don't see it from H1, guys, you don't go further. H1, M30, I classify as same time frames. These are my principal time frames for execution. You can use either of them to see. As long as you see it from these time frames, it's fine. Otherwise, don't go for it. Smaller. Student was trying on M3 today. The price reversed on him 4 times, so he was really bragging. So you will see the issue is when you go without this price, sometimes reverse on you, you'll feel it pretty bad. What I give you a logical approach. I gave earlier. I will tell you yes, you can. So let's say I want to take a trade from the here. I believe price came back. It might go higher. Again, guys, volume is one thing. Remember, if volume is against you, you can't. That is the topic not to discuss. Leave it. The topic is to take the trade. What do you need? What is the thing you need to execute the trade? We discussed this already. I said you need
Volume.
no volume is okay. Volume is to initiate the process. Now, let's say volume is with you. You want to take the trade. What you want to do? Process, execute. What do you need first?
Execution. You need a candle
No, you need
and a level.
a level. Well done. Support and resistance, we name them. We call them H1 support and resistance. Please understand. You can say M30 as well. For me, H1 M30 is the same thing. Without them, there is no trading. There is no execution. Forget execution. Please understand, guys. Keep it in your head. You will find consistency in your trading. Now, is there a support and resistance here? Anybody would tell me. It's there or there. Yes. So you can't. Then if you don't have a horizontal, look for the vertical one. Everybody understands, right? Please confirm. Guys,
Yeah, you have the counter trend line too, which the 15-minute pullback too.
Okay, you have this. Yes, you can use this. You can use this. You have to establish vertical support and resistance, right? Guys, without this, you can't take a trade. And that support and resistance will define, again, what she will define, let's say, again, your risk and reward tool. Guys, so it's a very systematic way. I want to approach it in a systematic way so that you focus on the process, just carry on trading. Guys, without a support and intraday support and resistance, intraday support and resistance, H1 M30 I'm referring to, you can use any time frame of your choice. I won't stop you guys. This is your choice. H1 shows you clear, less noise in market structure than M30. You'll find it easy. That's all I'm saying. But listen, you have to establish a support and resistance. That support, intraday support and resistance is your risk, determines your resist. Reward is always determined by H4 variation, variational level, that is number one, or the next condensed trading plan. Normally, the condensed area of interest is your reward. Prior to this, if there is any reward, yes, it's a variational level. That's only could be reward. Risk is always intraday support and resistance. Are we clear, guys? Everybody, guys, please. This is 100% you can take a trade. There's no problem. As long as you systematically follow this, you will find yourself profitable overall. I tell you what, price bloody respects them. That's the thing. Your risk against reward is always better. Are we clear, guys? Please understand. So if the price comes back, price comes back is one thing, guys. Please. Volume comes in for you to initiate the trade in terms of can I now go on to execute it, look for execution. Without volume, if volume is against you, you can't. So this must be done in advance. You're sitting now, between you and you placing an orders, looking for execution. The volume is which can stop you only. So yes, I'm waiting now. Right? Of course you can. Price comes back. Of course you can. It depends. Well, again, I will tell you exactly how to take a pullback trade. This is called continuation trades. This was a reversal trade. I will tell you exactly. For continuation trade, there has to be a rule that must be respected. I'll go through with you on that when it comes to execution. But everybody understand risk and reward, please. Both of you understand completely, yes?
Yeah.
Yeah.
Matt, brother, you understand completely, yeah?
Yeah, for sure.
That's it, guys. I hope you enjoyed the session. No session tomorrow. We will resume the session on Sunday, yeah?
Thanks, Wakar.
Thank you, guys. Thank you. Take care.
Goodbye.